Peace, guys. Welcome back to ZENSFXHUB, where macro markets are simplified. I know it's been a minute since I dropped the video. Took a well-needed break from the markets, and I'm back with a fresh mind, new perspective, and of course, some gems for y'all, okay? So, not even going to talk too much. We're going to get right into it, okay? All right, so where are we now? This is going to be an economy update, okay? The economy isn't bad, but it's not great either. And I've been seeing people online arguing whether, the economy is doing great or whether everything is falling apart. And the truth is, we are somewhere in the middle. Welcome to Zenville, okay? Think about the economy like a neighborhood. Even though some families on the block are doing well, that does not mean everyone on the block is doing well. And this is where we are in the economy. On one side, businesses are still investing, people still have jobs, and companies is still making money. While on the other side, just pretty much everything costs more. Housing, insurance, groceries, everyday living, things that people need to survive cost way much more money, right? Because inflation has been going up for the first 2 quarters of the year. So where's the money going, right? That's what we should be asking us. And remember, in every video, I try to, always keep and like instilling your mind to think like an investor, right? When you think like an investor, I know it's kind of difficult because you're not like an investor on that level, but that those are the people, those are the companies that move the market. So we have to start teaching ourselves to think like them. Markets move based on where investors put their money. Right now, the biggest winner is AI, and it's been AI for the last few years. Companies are spending billions of dollars on AI technology, data centers, computer chips, and cloud infrastructure. Okay, think about it this way: when the internet boom needed websites, when the internet first hit the scene, AI needs massive computing power, and that requires a lot of money and electricity. So money follows opportunity, and right now AI is the biggest the opportunity that investor sees. Okay, so what is happening with gold and silver? I know that is everyone's question because like me and for like the rest of the fucking retail trader world, we all thought gold was gonna be at $6,000 an ounce, and we actually seen the opposite. What we've been seeing is a very hard pullback on both gold and silver. But before this massive pullback that we've been seeing, gold has been on a crazy uptrend, and so has silver. Why? Because inflation, government debt, global uncertainty, and central banks buying gold. And now that AI, I forgot to include this, but now that AI is very upfront and personal in our lives, silver is a very huge asset. Silver is very well much needed in order to keep AI going. So this is why we've been seeing these two commodities perform the way they've been performing. And this is where I'll take you to the chart, right? So to put it into perspective, right? Look, this was 2004 alone. Silver was trading at around $22 an ounce and got all the way up to $121 an ounce in the matter of 2 years. That is insane. If we take a look at gold is a different beast in itself, right? Because if we take a look back at what 2000 and let's go to 2004. I mean 2004, 2024, right? From 2024, it went from around $1,800 an ounce, and we got a high of around $5,600 an ounce this year. So in a matter of 2 years, right? But gold give us a little bit more history as far as the uptrend. Besides this hard pullback that we had here, where it dropped around 45% and then just started to consolidate for a few years, gold has just been doing nothing but going up, right? So us seeing this, pullback that we're seeing on gold makes a lot of sense. And not only does it make sense, it's very well needed. And I'm going to discuss gold a little bit more throughout this video. And also, I'm going to create a whole separate video just talking about gold because I got some really good information and gems that I want to share with y'all when I went down the gold rabbit hole. I didn't want to put it in this video to make this video too long, okay? So let's get back to the slideshow. Okay. So why are they falling, right? Why isn't gold at 6,000 an ounce, and why isn't silver, trading towards $200 an ounce right now, like how we all thought? It's a combination of several things, right? Investors have taken a huge amount of profit after new highs were hit. Again, think like an investor. Imagine you were an investor, you had, let's say, $1 million, right? And that's just me being conservative, because you got to remember, these institutions, these investors are investing millions, if not billions of dollars into these markets, okay? So let's say you had $1 million and you bought gold at $2,000 an ounce, right? You would have owned 500 ounces of gold. When gold hit $5,500 an ounce, you would have turned your $1 million into a $2,750,000 profit. Pretty much, you would have 175% extra your fucking trading account, and that's just investing $1 million. So you gotta remember, they have been in gold for years, investing a lot of money. So it hitting $5,500, $5,600 an ounce, they walked away with a huge ass payday. And this is why we've seen gold drop, because again, where they're putting and pushing their money, if they're pushing money into something, it's gonna go up. If they're taking money out of something, it's gonna go down. Okay? So that's the first thing. The second thing, the US dollar is performing way better than what I expected it to be and what a lot of people expected. Like, we were coming into 2026 thinking that we were gonna get rate cuts. That was gonna be good for gold. Gold's gonna continue to go up. $8,000 an ounce gold in 2026. But we've seen the opposite. No rate cuts, potential rate hikes on the table, inflation going up, and a war started, right? So remember, right? Gold is priced in US dollars. So when the value of the US dollar goes up, it costs more for people to buy gold. And as an investor, thinking like an investor, there are two things that they care about: is protecting their money, not really losing much of it, and making money. Okay. And the third thing, interest rates are still high while inflation is rising. So if inflation continues to rise, this is why rate cuts is on the table. And if that happens, that's going to make the US dollar increase in value even more, which is going to make it more expensive to buy gold. Okay. So what am I watching right now? The biggest question isn't whether gold or silver are bullish or bearish, but whether this is a normal correction within a larger trend back to the upside, or is markets beginning to see a bigger reversal. Think of the environment like a relationship, right? Let's say you dated a boy or a girl in the past, right? They cheated on you, broke your heart, boom, right? A few years later, you meet someone new. Well, you shouldn't go into it, but when you meet someone new, you don't want to go into that relationship based on what happened on the past in your new relationship, right? You want to give this person the benefit of the doubt and the opportunity to prove themselves. Yes, in the back of your mind, you're gonna be like, okay, this is a possibility that this could happen, but you don't want to be so fixated on that. It's the same thing when I'm realizing we are in a very unique environment right now that has never been seen in history before. I am a freak when it comes to trading and when it comes to like macroeconomics. I go back into time and study the shit, right? So what I've noticed is that we have never been here before, right? We never been here. Have we seen inflation being high? Yes. Have we seen a Fed doing rate cuts and rate hikes and talking about, have we seen a war? Yes. These things have happened in the past. That's why it's good to go in the past. But what we have never seen is AI being at the forefront of things. We have never seen, literally central banks buying gold at such a large rate. Central banks have been buying gold at such a massive rate for the last 2 years. Of course, in the past, yes, they bought gold and silver and stuff like that, of course, but not at the rate that they've been, right? So we are in a new environment. So we have to give this new environment the benefit of the doubt to show us what it wants to do. That's the whole point of the analogy of me bringing that up. So I will continue to keep my eye on the US dollar because that affects gold. I will continue to keep my eye on interest rates and inflation because that affects gold. And I will continue to keep my eye on central bank policy because that affects everything, right? So these three things will tell us where gold is and silver is headed next. When it comes to the currency side, you guys know I love the yen. If you've been watching my channel, I love the yen, right? For years, the yen has been an outsider. While countries like the United States were raising rates, and to fight inflation, Japan kept their interest rates level at negative 0%. Right? And that created a massive gap between Japan and other major countries. But things changed in 2024 when they initiated their first rate hike, and we seen the interest rate actually get above the negative. Okay, so The Bank of Japan for the last 2 years have been increasing their interest rates, and they're looking to continue to increase their interest rates. And if that happens, then that will create some opportunities for us, especially when you compare the yen to other countries that's either pausing their interest rate, they're not doing anything, or they're cutting, right? So this is why I'm keeping my eye on the yen as far on the FX side, right? So the big question we need to ask ourselves right now is not if the will the economy crash, but the biggest question is what will happen first? Does inflation continue to raise and continue to get higher and higher and higher, or will the economy actually start to slow down? Why does this matter? Because pretty much everything is affected by that question, right? If inflation continues to go up, go up, go up, then that's going to cause the new Fed chairman to actually increase interest rate hikes, and if that happens again, that's going to have an effect on the U.S. dollar, which is going to have a spillover on things like gold and silver and other currency pairs. Okay, so right now the market is constantly trying to figure out which direction the economy is heading. And going back to the analogy of the relationship, we have to give it the room to figure it out. Like this is why I needed to take a step back, because I felt like I was reading every single headline, watching every single video, trying to keep myself updated so I could know how to trade gold, instead of just taking a step back, taking a breather, and figuring out what the fuck it wants to do. And I'm going to allow it to do that. Okay, so as always, if you found any value in this video, please like, share, and subscribe. And before I let you go, I just want to say that I have been taking some trades for the month of June on gold and silver, and they weren't buys. Okay, I have been taking trades on gold and silver, but they were not buys, right? And I'm gonna start with gold real quick. I got in for 3 trades on gold this month. Yeah, this month. Tomorrow's July. And these are the 3 trades that I took. I took a sell here, and I've been trading it more like a day trader and not really like a swing or position. What I could have, but I didn't want to leave my money on the table. I got in for a few days, held maybe the most for a week, got my profits in and out, right? So I got in around $4,500 an ounce, and when we got to around 42, like 42 250, I took my profit, right? So that was the first trade. Second trade I got in, I ended up scaling in again once we created this, like, lower high on the 4 hour time frame. I was like, okay, I think this is going to be another lower high. So I went, trusted my instincts, got in for the sell here, and then I ended up taking profit around somewhere around this candle. I didn't wait for the candle to close. I was like, nah, I'm taking my profit. And then I ended up entering again on Sunday. Yeah, on Sunday that just passed, I ended up getting in for another sell, which I think I'm going to allow myself to actually hold this trade, because I do see gold getting down to $3,500 an ounce. That's just where I have it going, right? And then the second level I could see it possibly getting to is maybe $3,200 an ounce. But right now my main focus is $3,500 an ounce. So I'm gonna try to swing this in a little bit of profit, nothing too crazy. It is having a hard time around this 4,000 an ounce, so I'm keeping my eye on it. Now, when we go look at silver, I only took 1 trade on silver. And it was around here. I ended up selling around $70 an ounce, and then I took my profit at $61 an ounce around here. Could have held again, could have held, but I'm just being very mindful in these markets, and not trying to put myself in a position where I'm so fixated on one direction. And I'm just kind of allowing the market to show me what it wants to do while still making some money, right? And then on the currency side, I did take a trade on GU. Not gonna lie, I did. I got in around 130 or $1.34, and I ended up taking profit around here. Once we got these 2 massive drops, right? And that was it. So right now, only thing I have open is 1 trade on gold and a little bit of profit. Looking to scale in on silver, maybe if we can go ahead and maybe get a pullback, maybe to this level or even to this level around here, that will be a nice entry for me. But if not, not really tripping, and I'm just gonna continue to just hold my gold trade and just chill and let the market show me what it wants to do. All right, so I will see you guys in another video. I'm happy to be back, and I trust that you guys are doing well. See you soon. Peace.